Hi everyone, welcome to our 12-part series, Inside the One Big Beautiful Bill Act. I'm Kenny Birch, a tax director in our mortgage banking tax practice. And throughout this series, we're breaking down the most important tax changes under OB3 and what they mean for you. These updates can have a real impact on planning, compliance, and your bottom line. So if you want to stay ahead and make informed decisions, you're in the right place. Let's take a look at the charitable contribution deduction for C corporations and the new limitation under OB3 with Caira Liebhart, an expert in our mortgage banking tax practice.
Hi Kenny, thanks for having me.
Caira, let's start simple. What's a charitable contribution deduction in the first place?
Yeah, so it's a tax deduction corporations can take for donations made to qualifying charitable organizations. Basically, it reduces taxable income when a business contributes to charity, but there have always been limits on how much can be deducted in a given year.
All right. What were the rules before OB3?
So previously, corporations could deduct charitable contributions up to 10% of their taxable income, and if they donated more than that, the extra amount could be carried forward for up to 5 years.
Got it. And what changed with the enactment of OB3?
Yeah, so the new law added a 1% floor for corporate charitable deductions, which means that corporations can now only deduct a portion of their charitable contributions that exceed 1% of their taxable income, and the total deduction still can't be more than 10% of their taxable income.
Okay, so basically it sounds like now there's a threshold in order to qualify for the deduction, is that right?
Yeah, that's right. So corporations just have to exceed that 1% floor before any deduction applies.
Awesome, thanks for clarifying. Could you give us a quick example?
Of course. So let's say a corporation has $1 million of taxable income. Under the old law, it could deduct up to $100,000, which is 10% of 1 million, with no minimum. Under the new law, the corporation can only deduct a portion that exceeds $10,000, so that's that 1% floor of 1 million, but the total deduction still can't exceed $100,000. So if the company donates $70,000, only $60,000, which is the amount above the $10,000 floor, would be deductible. And if the company donates $150,000, their deduction is limited to $100,000 minus the $10,000 floor, so they can deduct $90,000 this year. The remaining $60,000, made up of the $10,000 floor plus the $50,000 excess, gets carried forward to next year. What's interesting here is that because their donation went over the 10% limit, they actually get to carry forward that 1% floor as well.
Awesome, thank you for sharing that and appreciate the example. If there is a carry forward, what happens in that situation?
Yeah, that's a great question. So let's say in year 2, the corporation again has $1 million of taxable income and donates $30,000. For the current year, the deductible amount is $20,000, which is the amount above the $10,000 floor. Then you add the $60,000 carry forward from year 1, which brings the total deduction to $80,000. Since this amount is less than the $100,000 limit, there is no additional limitation and no remaining carry forward. Also, just to note, any carryover from a prior year can create a new carryover in the current year. So to sum it all up, the deduction is still limited to 10%, but now there's a 1% minimum before any deduction applies. And since anything under that 1% would be lost, it can make sense for taxpayers to bunch smaller annual donations into one larger multi-year gift to make the most of their deductions while still keeping an eye on the yearly limit.
Awesome. Thanks, Caira. Really appreciate you breaking down charitable deductions for corporations. There's more great content in this series, so please be sure to explore those videos too.